Welcome to Inside the Markets, StockPulse.com podcast. Joining me today, a frequent guest, Peter Spina from Goldseek.com, Silverseek.com. Peter, appreciate the time. Always a pleasure to talk shop with you and pick your brain. You once said to me here a couple podcasts ago that the majority of the time spent in the precious metal sector was unpleasant. How's the vibe of the precious metal markets now? Is it pleasant now, Peter?
Well, at this moment, Rob, it's pleasant again. That's a very quickly changing thing in this sector. But yes, the trend that started back and was going into the start of 2020 is continuing. COVID came along and just like knocked everything, it just kind of knocked everything in this wild, violent manner. All markets and gold and silver and the mining stocks all got viciously hit really quickly, and suddenly it's all snapping back very, very quickly as we see, and it's accelerating now because of what happened from COVID, these lockdowns and all the money printing and so on. So the trends that have been building for a long time, we're just kind of shaking a little bit for several weeks, and now we're back into those trends, and they're accelerating because of what just has happened.
Yeah, and not that I certainly needed B of A to tell me this, but when you see them writing articles and Zero Hedge that guiding gold to 3,000 by next year, claiming it's really the only real money, that's a pretty positive sign. So obviously gold's front and center here, but I think the silver market's what you like to talk about. So why don't you break down silver and how you see it, and where that ratio might end up? I know it was pretty tall and certainly on the way back.
Well, the gold silver ratio spiked to 130 or something, just above it briefly. We're touching 100 or so today, so that's a huge correction from those lows. But from the long-term perspective, we're still near all-time record highs. So 100 ounces of silver for 1 ounce of gold is quite the ratio. We'll get back under 100, but we'll be swinging around it for a while. There's an industrial component that's very strong, influence on the silver price and related to the general markets and so on. Ultimately, gold will start to, express itself more through the silver price as it breaks to new highs and it goes, into record territory. But silver is benefiting from that industrial, interest right now. When COVID started, the industrial demand just it was a total shock. Everything shut down. And now as things are reopening, there's a pent-up demand. There's, of course, a gold price taking off on top of it. And the markets are coming back. Commodities are rallying. So all these things are kind of benefiting and coming together now to really shoot the silver price up. And that's, getting a lot of people's attention. So, of course, price is a good, a marketing tool as people start to now take a look at silver and, look at what is the proper silver price. And there's a lot of good arguments to be made that silver should be well above $20 an ounce here, with gold at $1750, $1,800 an ounce. So I think in the near term, silver could pop above $20 an ounce and then settle back a bit, or maybe nearing, there's a strong technical resistance zone around 18, 19, 20 to 21, and we've battled that in the past years, so we'll see if we can break above it. But I think we will. I think we're going to bust right through that. It's going to shock a lot of people. There's good positioning in there to get some investor interest into this sector, which a minimal amount of investor capital coming into silver can really move it. So it's got a good prospect right here, but beware because it does have a very volatile signature to it. It does rally very quickly. It does have these quick pullbacks, so watch out for it. If silver does have a pullback to the $15 areas, I think that's a gift right now. So the general rule right now is you buy the pullbacks and you watch this trend develop in gold and silver. So that's approach, and that's my forecast on it.
Yeah, and certainly the conditions are right. I mean, how many $1 trillion checks do you have to write before you realize the dollar isn't probably as healthy as it looks on paper? So,
well, that's really hard to understand what the value of the dollar is, and we keep saying, oh, the U.S. dollar is falling, and then the U.S. dollar index is still very, very strong. And it is the US dollar is strong versus all these other paper currencies, or I don't know, it's not even paper. What did Powell admit on 60 Minutes? It's a digitally created currency. Yeah, they just hit the keyboard, hit the database up, and create trillions of these new units. But um, the real price of the dollar is reflected, and the value of the dollar is reflected in the price of gold. So with gold hitting 1750, you look at that, and the value of the dollar just is reflected in that. But Canadian dollar, euro, all those guys are hitting record gold prices and also record lows, and losing their values very quickly. So it's it's quite a hard a period right now for someone to want to sit in fiat and watch, these things get devalued so quickly. So the question is, where do you hide?
Yeah, I know you were critical of the. Well, I don't know if you're critical. You're certainly breaking down the Canadian dollar and its free fall. And I don't know. Maybe it is the monopoly money. It looks like, but I think a point that you just made here, the move to the digital currency, and in Canada, this COVID was the perfect opportunity to, and not just in Canada, but I certainly heard the story. And you talked about it there. No one wants to touch cash. It's just germs. No one wants it. So perfect opportunity here. And now the government's about to seize on that and getting aggressive to do away with cash. And I've even heard the story that the government has your account, is already tapped into your account via all of this stimulus money that they're firing back. So speak to that, and price precious metals, if there was no cash.
Yeah, I mean, people will look for gold and silver as a way to preserve their value and wealth during the monetary destruction. But the government's taking more control digitally, which is a problem because when there becomes a point, especially in other smaller countries, especially ones that are maybe like oil countries like Venezuela, we see their currency collapse. But certain countries are dealing with capital control issues, with a dollar shortage, or people fleeing out trying to get cash out of the country. So Canada, of course, is seizing upon this opportunity to take more control and powers, and take greater ability to take action if and when needed. And the if is less of a question. The crazier the things get, the more money and policies and things that they're doing. Canada has, as far as the country itself, there's a lot of resources. There's trillions of resources, all sorts of commodities, energy, and so on. But you have to be able to develop that. There has been a lot of pro-mining friendly initiatives in certain places and so on, but on the other hand, you see the problems with the pipeline being built, and more liberal leftist policies, and environmentalists taking more action. So it becomes more and more difficult. So how do you unlock that wealth? And they haven't done that, so they're in a weaker position because of these policies in the past. And now that gets reflected in these situations because they don't have the reserves. They don't have the savings. And they're not the U.S. They're not the empire. They're not the number one economy in global, imperial power like the U.S. is. So Canada is sitting there right now with no gold reserves. They're sitting on capital, some real difficult problems. They're manufacturing, commodity-based, energy-based economy that's seeing all these prices drop heavily, and at the same time, they're giving away tons and tons of money through these different programs, and their deficits are blowing up and so on. So you start looking at how their reserves are going to deal with that. So capital controls is a big question, and you need to address those questions now before they may come into place. So, but it's just gold and silver obviously are a way to diversify from it, but they can still access it. If you're going to be buying gold and silver digitally and so on, they're going to be able to just confiscate that too, right? If they have all that information.
Yeah, they say possession is 9/10 of the law. I think it's 10/10 of the law, really. But
if they force a confiscation order, they'll just force you to hand it over, or else they'll threaten and put you, heavy fines in jail. I don't know. I'm sure they're pretty vicious with those fines in Canada, but if they ever do that. But I don't know. We'll see. The commodity prices have potential to do very well in inflationary environments. So there might be a commodity cycle turn here that does help Canada out. And so it is a small population with huge resources, so they do benefit from that side. And being next to the U.S., being to the biggest economy in the world, also helps. So.
So let's move on to something I've been talking about lately, and this is millennials. So I didn't give them enough credit. My apology to them. They're a little more savvy about gold than I thought, and I've been reading a few studies, and it seems like they're into the yellow metal, but I don't think they really get reached out to too much to the proper ways to buy it. I know we've talked before. You've pointed out several ways to buy it. And I think this is a perfect time to kind of talk about what the world that we're in. And we talk about these equities a lot, because if you're not going to get the physical metal, like you say, in a risk confiscation, well, you can certainly probably make greater returns by buying these equities. So how do you see reaching out to them, and what would be the message to them on how to play these very volatile equities markets?
Yeah, well, they're benefiting maybe from that side. The traditional model of brokerage managed money accounts. In the past, you would have someone who really manages and kind of questions your own investments. And today, online trading, and you have Robinhood and all these different ways for millennials to buy equities. They are doing it differently. They're finding their own ways to invest, which means they're finding also with the internet and so on ways to find different information. So I think gold and silvers, they don't really understand it all that much, but there are some who do get it, and I think they have learned that from Bitcoin, perhaps. That kind of got a lot of them to question what is money, a lot more than what gold and silver has been. But it's also kind of led them to gold and silver to understand what money is. I don't know. What I would tell them about mining is it's very speculative, very high risk. But when you compare it to the general equity markets, and when you're buying companies like in the tech sector, like Tesla or Shopify, and these really fun bubble like stocks that are just going up in multiples and values, like, well, if you want to take that kind of risk, we'll take lower risk and look at these mining stocks because they're producing some excellent cash flow now. And if you want some upside reward, your risk reward opportunity in these companies are a lot more significant than in taking these risks in the general equity markets, especially with all the economic uncertainties now for the next year or two, or how long it will take to rebuild the economy from this point. So, gold and silver mining stocks are very difficult to invest in, and most of the time it's very unfavorable. The odds are against you. But in the last 25 some years of following the gold and silver mining stocks as an investor in juniors and exploration companies, this risk reward is definitely the best one that I've seen. A little bit of the easy money has been made. You've seen some of these companies double or triple, the senior companies, the real low risk ones that were just brutally sold off in this market correction. But they're all breaking out to new highs. Newmont, Rand or Barrick Gold now, and some of these big ones are Kirkland and Equinox. They've all Sandstorm. They're all looking excellent. So, they're starting to make some big gains from the lows, but in the bigger perspective, you look at their changing balance sheets with the cash flows that are starting to turn back on. These stocks have been hated so much; they've been sold down. They haven't been pricing the correct value of the metal that they produce or they hold in the ground. So, I think there's a lot more upside in the markets. They're very volatile. They can move very quickly, so you have to have a bit of a stomach to play, especially the smaller mining companies. So you got to know what your risk tolerance is, but build a basket of them. And I think right now you're seeing more of the big gains go from or starting to develop in the mid tiers. The senior producers have been the first ones to kind of take off and do well. But now you're seeing some of the other ones really do well. And then also, the ones that are very high risk, the ones that are very, very, very marginal producers, the guys who produce silver at $18, $20 an ounce. When silver hit $12, $13, that just looked horrible for them. their stocks got really sold off, and now if silver is looking like 18, 19 plus, those stocks really come back very quickly too. But of course, it's very, very sensitive to that silver price, so that it's very leveraged. And when the silver price does take off, those companies are they're going to do extremely well. So there's a lot of upside left. Just just look, build a basket of companies to invest in and do your research. So
Yeah, and let's talk a little bit about the health of the sector. Like we talked about, most years not enjoyable. It looks like go time here, maybe a risk off scenario. Well, as much as you could in this sector, but you've got drill programs coming back to life. I don't know. Do we really know where everything sits with this COVID? I mean, are CEOs not able to get to projects? How long will that last? Will that really interrupt anything? I mean, how do you kind of see that overall vibe, or is this just something that'll be in the rearview mirror pretty quick and charge forward?
yeah, I don't. That's a big problem. Is how do you deal with this new situation? And for a lot of mining companies, it's a problem. Underground mines probably face a lot more risk too. So if there's a COVID outbreak at an underground mine, are they going to be forced to do a 12, 14 day or whatever? I don't know, some sort of close a mine down for a month there, or those kind of situations. But then you have the other problems of being able to access the site, geos that are doing work on their exploration projects in a different country. They're not able to get there. They're not able to get the drill rigs and equipment there on time. There's all sorts of delays and these things that they have to deal with. So there's a lot of planning around these questions taking place. So I'll leave it up to a lot of those guys to figure out how to do it best. So we'll see. The exploration programs are kicking back on. The season is starting up. There might be some delays for sure in some companies. Other ones might be able to continue forward. But that's going to be a problem here for the near future is being able to do it like they've been so easily been able to do it before. But on the other hand, the sector is going to get a lot more interest now as the gold price takes off. There's going to be a lot more capital financings and incoming cash being thrown at the companies to advance these projects and programs a lot more aggressively. So I don't think, you look at the second half of this year, next year, there's going to be so much money coming into the exploration and juniors that they're going to be doing massive exploration programs, and that potential certainly exists. So the near term is a bit an issue, but long, 6-12 months out, I think it's going to get very exciting. There's going to be a lot of exploration restarting, and it's been dry. You've been watching the sector. It's been highly underexplored. There's not been a lot of money going around, and these larger producers are desperate to replenish reserves and find new ones. So it looks like a great time.
Yeah, before I let you go here, let's talk about your operation. I know you've been around 17 years doing this stuff, and I believe Silverseek, you relaunched that, and that's 11 years going there. So why don't you talk about how to find you and about your operation and why you put that together and what you're doing and how you can help these investors find good companies.
Sure. I started following the gold sector as a gold, silver stock investor, junior exploration stocks, and so on. So it was actually back in '95 that I started the site following small producers and exploration stocks, and that developed into Goldseek.com, which now is a platform for investors to keep updated on what's happening in the sector. We're providing the latest information as well on what's happening in the gold markets and the monetary system and financial markets and all that fun things that are going on right now. And it's changing so quickly. But yeah, we're relaunching the sites in the coming weeks. Silverseek is in the process of launching beautiful new websites. So we'll have a lot more features to help serve the silver investor and community with a better site, and Goldseek will be coming soon after, and we'll be turning 25 in August, so we'll have some other exciting events coming up around that. But for now, we're just trying to get the new sites rolled out and doing a lot more research on the producers and analysis of some of these upcoming producers as well. So Yeah, goldseek.com, silverseek.com, and at Goldseek on Twitter.
Appreciate that, Peter Spina. Goldseek.com, silverseek.com. So I look forward to checking back in and seeing how things unravel. Thanks, Peter.
All right, thanks, Rob. Thanks for having me on.